Alright, welcome back everybody to NLF for another YouTube video where today, as the owner of NLF, I'm going to be breaking down what I see good traders do versus how I see bad traders operate as a prop trader. So I won't be going on about trading strategies, risk management, things like that, the actual trading aspect. But what I will be talking about is how to operate correctly and what good traders do versus what bad traders do when they are trying to trade and make their first bit of cash off of a prop firm account. So without further ado, ladies and gentlemen, let's get into it. All right. So yesterday I came out with a tweet. If you're not following me, you know where to go, but let's talk about this. So one of the biggest killers I see with every prop trader out there, or a very big portion of them, is the rule side of things. Now, if you request a payout and a prop firm says to you, oh, this rule you didn't follow, and you know you read every rule back to front, you checked their FAQs multiple times, and this rule wasn't in their FAQs before you breached it, maybe you shouldn't be with that firm. But if you are trading with a firm, whether it's NLF or it's another firm in general, and you know their rules are legit, you know they stick to the rules that they have and they don't change them daily, then you know you're A, with the right firm, but more importantly, B, you know what to follow. So the first and probably most important aspect of a trader that I see when it comes to good traders versus bad traders is, do they take the time to read the FAQ? So if you jump onto the NLF site, you go down to all the account sections, this is the two types of traders we see come to NLF. You see trader one, all right, I think I like the look of a two-step. Okay, I get 80%, awesome. I've only got to trade 3 profitable days, great, and I got to wait 14 days to get my payout. Lovely, lovely. All right, it's 8 and 6% profit targets, it's 8% static, that's good to know, and it's 4% daily. Okay, cool. So I just can't risk more than 4% a day. I can't do overall drawdown, can't be more than 8%, and I've just got to make 8%, 6%. Awesome. And then they go and buy the account. That's what either newbie traders do or arrogant traders even. That's how they'll operate when it comes to picking their account and then buying their account. Good traders, on the other hand, if you've traded with us before, you probably won't need to check the FAQ because you've probably read it the first time around. But just for hypothetical standpoint, you're a brand new trader to NLF. This is how I see good traders operate. They come down here. Okay, so two-step accounts, it's 80% profit split, 3 profitable trading days. Okay, but how much profit do I actually need to make on all of these days? All right, the reward cycle's 14 days. Starting when? Does it start day 1 of the live account? Does it start when I place my first trade? I don't know. All right, 8% and 6% profit targets, pretty good. Static 8%. All right, good to know. And then 4% daily drawdown. All right, how is that calculated? Is it calculated off my equity? Is it calculated off my balance? I'm not too sure. So then they'll go up to the FAQ and they'll go down here to whatever section that they need to know. So for instance, it may be general. If you're looking at a two-step, you might want to look through the live account rules, etc., etc. Because this is where a lot of traders get caught out. What we see a lot of traders do is they'll breach a rule and then they'll say, oh, well, I didn't know. Now, it's very clear at NLF. We're a transparent company. We don't scam anyone. We don't intend to scam anyone. I'm not building this business. I'm not working day in, day out to make a few $1,000s from scamming traders. We are here for the long haul. And because of that, this is how we choose to do our FAQ. We put all the rules on not only the website, but in the dashboard as well. So if you actually have an account with us and you have your trading dashboard details, you can read through all the FAQs in your dashboard. So there's 2 places where you can find every rule. All we expect is that you read them and you learn them. We keep this updated every day. I speak with our FAQ manager every single day. So all you have to go and do is read them. Otherwise, you get situations like I'm about to say where a trader will breach a rule. He'll go for a payout. He'll find out that he's breached the 2-minute rule 3 times. He's put 80% of his trades haven't had a stop loss on them, and he's breached his account without knowing. And then they'll come to us and say, well, that's your fault. You didn't tell me. It is not our job to tell you what our rules are. It is up to you to read them. It is up to us to update them, and they're updated daily. We make sure everything, if there is a change, is always on the website correctly. So that is why the first and probably biggest thing I see with traders at the moment is they're not doing their due diligence. To tangent off this, I want to speak directly to you. So whoever's watching this, I want you to know something. Take trading seriously, all right? It's not an Instagram money thing that's going to make you rich quickly. No. It is a profession plenty of people do to make very big sums of wealth, but it is a very serious game, right? You're not just going to walk in. The arrogance, if you think you can just walk in on a chart, take a trade, and you're going to make money, you're very, very deluded. So when you're coming to trade with a prop firm, treat it like a business. Do I have all the information? Do I know everything about my account that I need to know? All right, I've spent $200 so far. I've lost that account. How much am I willing to spend again or invest into my trading journey again to keep trading with this company? Do I like the rules? Does it fit my style? You need to treat your trading like a business, and that is the difference between good traders and bad traders. These good traders will come in and they won't care. They won't care about the account. So if you go back to the account section, they don't care if the account has 10% profit target or 50. If it's cheap, they'll buy it. And that is a really bad way of choosing the right account for you. So honestly, you should not be looking at the prices. I understand if you can't afford certain things, fair enough. If you've got a $500 budget, maybe you start with the 25K and that means you've got 5 attempts. But ultimately, the price is the last thing you should be concerning yourself with. It really comes down to, is these statistics correct for my trading? Does the FAQ align with my style? And can I make money with these guys? That's how you need to think. So the very first thing I would say that differentiates a good trader from a bad trader would 100% come down to, are they reading all the frequently asked questions? Are they coming to the FAQs? Are they copy and pasting the ones that are important to them? So for instance, if you're trading a two-step, you're not going to care what instant account rules are. But if you're trading, say, a special account, well, you should have all these copy and pasted. You should come here, okay, how does the instant account work? Let's say you're using this one. You might want to copy this down. You might want to copy the payout on demand part down. That way, you know, okay, I need to make 2.5% to get my payout from that account. These are the things you need to know. So to answer the very first question of the YouTube video, what is the biggest differentiator between a good trader and a bad prop firm trader? It definitely comes down to reading the FAQs and making sure you're following all of the rules correctly. Now, the next thing I see, which I sort of touched on before, is back to the account statistics. So a lot of traders are operating from the wrong frame of mind. And what I mean is they are looking at day trading, or they're looking at prop firms as a get rich quick scheme. Now, can you get rich with trading? We all know you can. Can you get rich quickly? Relatively. But what is quick to you? If you're trying to change your life overnight, it's not going to happen. I'm sorry. You're not going to make $25,000 or $2 million in one trade in a night and get paid out. Doesn't happen. But over the course of a year, can you scale the amount of accounts you trade with and the amount of payouts you get, and then how big those payouts are? Absolutely. And you could start a year with $200 payouts and very easily end a year with $2,000 payouts. So the next thing I would go into is what differentiates a good trader versus a bad trader is not looking at for the cheapest accounts or going necessarily just for the special accounts because you might have a better chance at getting a quick payout, but really looking through, okay, well, I trade maybe once a week, so a 3 profitable trading days account may not work for me because it may take me 3 weeks to actually even pass an account. So maybe I want to go with an instant funding challenge where, yes, okay, it might take me 5 weeks to get a payout, but in that time I might have 5 really big winning trades, and that means I've got plenty of capital in my account. The next thing you may look through is go, I actually don't like a trailing stop loss. It doesn't work for my strategy. Sometimes I like to take multiple trades in a day, and with a trailing stop loss, I might get confused. It might catch me out if I don't know, things like that. So don't be going for cheap accounts. Don't be going for accounts that look really appealing or because you see someone else is doing really well with them. You need to come and assess what is the best account for you. And that means genuinely sitting down for half an hour just to decide what trading account do I want to buy. And number 3, we will leave it here at 3. So we already went through reading the FAQs. As a prop firm trader, it is a must that you are reading through all the FAQs and making sure you fully understand what rules your firm is applying to your account. Number 2 is actually picking the right account. Taking a moment to not necessarily worry about how much you're spending, but more so being concerned with, is the account the right investment for you to make on your trading journey? So number 3 would be be, before you even get to buying an account with a prop firm, is your trading in order? And this is what I mean. Whether you're buying a 1-step, a 2-step for the first time, or whether this is your 5th time buying a prop firm account, but you've decided to go with an instant model, you need to make sure the whole way through the process, your mindset is correct. Because it is very easy for someone to pass a 1-step account. They get to the live stage and they're funded, and then they lose all emotion and all their emotional control goes out the window, because now they know what it's like to not only pass and become a funded trader, but now it's real. Now your opportunity to actually get a payout is real. Your ability to actually begin earning money is there. It's in front of you. You're a funded trader. And then that's when traders start to lose their emotional control. Same thing as the instant account. If you want to skip the process, if you haven't backtested your strategy, you're not confident with your trading, but you're so eager to make money that you go to the instant model, or very much the same thing. To wrap up the video with the final point, which is what differentiates a good trader to a bad trader, the final point is, are you ready and have you put enough time and experience into the charts and trading your strategy to be confident and comfortable with trading a prop firm account? Have you done your back testing? Have you forward tested? Have you even built the strategy? Have you figured out how much you're going to risk? Have you figured out what device you will trade off? Have you figured out a pre and post market routine? Do you have a trading journal? Like I said, I just listed 8 things in the span of 10 seconds on my fingers that you should know before you trade with a prop firm. And that is the difference between our good traders versus our bad traders. I've seen some of the trading journals our traders use. They are exorbitant. I don't even know if that's correct, but they are very impressive trading journals is what I'm trying to say. So my point to you is, when you come and trade with a prop firm, trade smart and trade properly. Don't rush. Don't look at it as a get quick rich scheme, but take your time. It is not about the destination, but it is about the journey, and the trader's journey can take years. So make sure your strategy is in place. Make sure all of your procedures and plans on how you choose to trade works for you and is in place. Make sure you know what the right account you are buying is, and make sure, most importantly, you are reading those FAQs back to front, because there is nothing worse than having the best strategy, picking the right account, but you don't follow the firm's rules. If you do those 3 things, you will absolutely go from that bad trader category to that good trader category, and you will not only become funded, but you will also start getting payouts. Now, none of that is a promise. Please disclaimer this. The overall point is, I'm just trying to shed a bit of light back to the community here at NLF, and to let you guys in on what I see the differences from a good and a bad trader actually is. Now, for more videos like this, drop a like, drop a sub. I'm here every single Wednesday. We stream Tuesdays and Thursdays here inside of NLF's YouTube, and I'll see you again soon.